Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon's giving away two great gifts to the loyal listeners of the Moving Iron Podcast. One is a pair of deerskin gloves, but I can tell you right now, I can use those gloves this morning, Chip. It's 6 degrees, little wind chill out there, so I imagine it's probably negative 42 degrees when I go outside this morning with the wind chill. So I need some gloves on my hands. What's it like up there? You guys getting some winter?
Oh, well, I'm not going to complain because we're probably in the low 30s. Had a little bit of snow, but it's mostly melted. You can keep the single digits. I don't need that until like February.
You're up there in the banana belt, man. Look at you.
Oh, I know it. It's balmy.
Balmy up there.
At first, I thought maybe your lips were frozen. I thought instead of pear, you said ferret. I'm like, they're giving away ferrets? Maybe you're out kissing the flagpole or something, and your lips were frozen like a Christmas story.
Yeah, that would have been. I can either confirm or deny that I've done something like that in my past life. So, but yeah, it's cold up here. So, deerskin gloves. You want some of those? Send an email to marketing@axontire.com, and they will send those out to you. If you want to send me an email at MovingIronPodcast@MovingIronPodcast.com, Axon Tire will pay you the first $50 of your registration fee for the first 150 people that sign up for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 19th of 2023. So check that out. If you're interested in doing that, send me an email at MovingIronPodcast@MovingIronPodcast.com. All right, Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. No matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create a connected customer experience and transform how you work today. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois. And he's nice enough to come on and talk about what's happening in the marketplace. So, Chip, how you doing this morning, man?
Hey, doing well, Casey. It's one of those days. For Friday, every day you look and you're like, man, it's Friday already. What happened to the week? So here we are. The markets are flying all over, and there's no shortage of things to talk about. That's for sure.
Yeah, no, there's a lot of stuff to talk about. So if you're looking at what's going on now, I think wheat is still one of those big contenders out there in the marketplace. That is the silent, carry a big stick and, what is that? Walk softly and carry a big stick type thing. That's kind of what it feels like wheat's doing right now, because there's a lot of news associated with wheat right now. So we've got the emergent situation that we see in the United States. We've got a lot of drought-stricken areas, but they've gotten some rain, but we still got a long ways to go before we break any droughts. You've got Argentina every week is lowering their wheat expectations. You got Russia that is now talking about lowering their wheat export tax. So they're going to look, and they're obviously going to start exporting more stuff. And you got India right now is talking about wheat and various other small grain crops that are ahead of where they were last year. So you got a lot of small grain talk right now, a lot of it revolving around wheat, chips. So I guess as you look at what's going on in the wheat market, what's your thoughts there?
Yeah, a little mixed bag, like you said. There's some bullish things out there, but the market seems to be focusing on the bearish news, primarily, the Russian stocks. But the one thing you didn't mention is we got finally some, clarity on the Ukraine export corridor.
Yeah.
So that was renewed, and that's kind of taken as a negative as far as the wheat market goes. So we really beat this wheat market up, kind of dancing around this $8 level on the Chicago wheat contract. We haven't broken the downside of that decisively yet, but the market is just not acting very well. And as the wheat market sold off, it's kind of drugged the corn market. Right now, this is a little bit concerning in these grain markets, particularly corn and beans, in the fact that, we're getting harvest wrapped up now. And typically, as you get into the holiday time frame and after the first of the year, you have kind of a seasonal run higher in prices. We're not seeing that. The funds are still long, a fair amount of corn and beans. and just not acting like we should right now. So, I think some of it also goes back to a week or 10 days ago when we got the CPI number out, and the stock market had a huge rally. There's a big sigh of relief that inflation was cooling a little bit, came in less than expected, although still mid sevens. And the commodity markets, I think, once that report came out, took the stance that, okay, we are seeing inflation starting to cool a little bit. That also means that the world economy and the domestic economy are going into recession here. And, it kind of let some of the air out of the inflation trade on commodities. And we've really kind of been a little bit ugly trading since that report. You got crude oil, and we've taken, almost $10 out of the crude oil market. Seen corrections in soy oil. That's weighed on beans. Talked about the wheat market really has gotten beat up over the last 3 or 4 weeks in here. And unfortunately, seen a little bit of a dead cat bounce here to start in, the overnight trade in the grains on a Friday. But, we just need that bullish, kind of lacking that wildly bullish spark to push us a lot higher right now, unfortunately.
Yeah. Yeah. There's about as many things pushing against you as there isn't. So, inflationary stuff. Let's talk about that a little bit and what your thought there. I mean, the dollar's been getting banged up here a little bit. So we're seeing a weaker dollar. We're seeing a lot of other things that are kind of bullish towards the export side of our business. But from an inflationary standpoint, you start looking at some of these reports coming out of, the EU and Japan. And obviously, you don't know, you can't really trust what comes out of China, but they're showing some inflationary standpoints too. Even though the dollar's getting weaker, the inflationary, imbalance that you see out there kind of knocks the weakness of the dollar out when it comes to the export side of it. So I guess, what are your thoughts on exports as we move into this kind of key export time of the year?
Yeah, it is a key export time of year here the next 2 to 3 months. We have seen bean exports remain pretty strong. Corn exports had a good week this week and bounced pretty nicely. and that goes back to dollar. We've seen that big correction in the dollar after the release of that CPI report.
Yeah.
And you had a muted response in commodities. So it's almost like, it's kind of a weird correlation, because you still had, as the dollar was rallying, you still had this inflation money flowing in and strong energy prices, strong grain prices. And, didn't seem like the strength in the dollar equated to the headwinds in our commodities as you would have thought. And now with the dollar breaking, it's kind of likewise. We haven't seen the support in commodities as you normally would have with that break off the highs in the dollar. So I think it's a case where we've gotten far enough along with the inflation trade, quote unquote, that now we're going to get very choppy. And, is inflation going to come down? Is it going all the way back to 2% like they say they want it to? Was it a 1 month blip, and then we're going to, be right back north of 8% in the next report? And so that uncertainty, I think, is going to cause a lot of volatility in these markets and kind of break some of the correlations that we normally would have, particularly the dollar. And, it's going to be about GDP and are we going into recession in the United States? And, the employment report here yesterday was stronger than expected, in spite of hear all these headlines, Google and Facebook and, FedEx and all these companies laying off massive amounts of people. And, you don't see that reflected in the employment numbers yet. So it's a little bit of a head scratcher out there. I think we're far enough along that now the trend, so to speak, is going to get choppy, because the interest rates have come up. We've got 30-year mortgages north of 7%. The Fed saying they're going to maybe slow the pace of the interest rate increases, but they're going to continue. I think most people think in December they're going to do a 50 basis point increase. And then, it still takes a couple quarters to have all these interest rate increases flow through the economy. So we haven't seen all the effects of it yet from the increase in interest rates. And, the argument is just like that they waited too long to start raising rates. Now the argument's going to be they went too far too fast without kind of pausing to see how it was going to sift through the economy and whether it was going to, pull inflation down. And, that's historically been the case with the Fed. is they, are late, and I think they're probably, it might be 9 months to a year down the road, but I think we'll find out. Yeah, maybe we didn't have to go, 600 basis points, 6 full percent on interest rates in,
Right.
a year.
Yeah.
Maybe we could have eased into this a little bit, but it was an election year, and you have that whole narrative in there as well. And
Sure. Yep.
so you can say what you want. Yeah, inflation came down a little bit. You could argue that it was due to seasonal adjustments, but hey, it's not 8%, it's not 8.2% now. It's only 7.7. So that's great.
Right.
See how
Yeah.
much money the consumer's saving?
Yeah.
They're only paying $4.20 for gas instead of $5.
Right. Yeah.
Vote me in.
Little victories, right? Little
Yeah,
victories.
exactly.
All right. Speaking of little victories, as you look at the cattle market, you see happen there's some bullish news that's going to come out of this cattle market here more than what we've seen right now. If this report comes out, this cattle on feed report comes out this afternoon, and it shows that there's less cattle on feed than there was a year ago, that's going to be some bullish news for the price of cattle. I mean, so I guess you're looking at that. I mean, we've seen this every year. I mean, every month, every week, it's just like there's a few more than there was. Sometimes it's right about the same, but it's kind of bounces back and forth, and it's not significantly higher or significantly less, but it's just kind of bounces around there, which is keeping that cattle price up. So I guess as you're looking at cattle, what are your thoughts there?
Yeah, sound like a broken record here, but I do think that there are some good things coming in cattle, especially if, and this is a big if corn would put a deeper break into it and, ease some of that pain of high feed costs. Seems like 18 plus months now, these cattle on feed reports have been really big, and you scratch your head, you're like, where are all these cattle coming from? Well, it's because of the drought. We're liquidating breeding stock. We're not retaining heifers. There's no pasture. It's a bad situation. At a certain point, that's all liquidated. There's only so much breeding stock out there. And after 18 plus months of drought, a lot of guys more than 24 months, they're going into the third year of it now. And, at a certain point, there's no more breeding stock left to liquidate. And we may be starting to see that. If we can, where the real bullishness is going to come in the cattle market is if we can ease some of the drought conditions, get some pasture back, get, cattle back out on wheat, if we can get some moisture out there, and have ranchers start buying heifers and shrinking the supply of fed cattle out there. That's when this thing gets explosively bullish. And we're not seeing that just yet. So, and we're feeding weights pretty heavy. I don't track that probably as close as I should, but some recent data I saw, we're really still feeding cattle pretty heavy. And so we're putting a lot of pounds out there. So that's the headwind. With all that being said, you look out here, February live cattle, 155.37. The December's just under 153. And that's a pretty, that's a moral victory right there to have prices that high. So I think we're pretty fairly priced right now, waiting for that spark. It could be a winter storm. It could be this cattle on feed report that shows decreasing numbers. It could be better conditions, in the plains as far as pasture. Maybe that's this coming spring. Hopefully, if we start seeing that and ranchers wanting to put cattle back out, into pastures and repopulate their breeding stock, I think the cattle market becomes wildly bullish. Unfortunately, the timing of that may be, coming right into that shining light in the tunnel that we're seeing called a recession. And so that might temper it a little bit, but it's hard not to be, pretty wildly friendly to cattle in the long run. The thing that derails that is, a big, deep recession, and which is entirely possible. So, again, with all the bullishness out there, it's going to be tempered by, how the economy can kind of hold together through this inflation phase.
Yeah. So on that, I've been thinking about that on that very point. I mean, obviously, when the price of oil starts jumping up, cattle prices come down, and we see those kind of things go back and forth, that yin and yang there. But just because of the sheer number of a sheer lack of number. I'm sorry, sheer lack of number of cattle that's out there on feed. I mean, going through the process. How deep has that recession got to be to really affect the price of cattle? I mean, the supply is so low. I mean, and demand's still high. I mean, how deep's that got to be?
Yeah, that's always. I don't know that anyone, even the smartest economists out there, can answer that. That's always the question, because there is some inelasticity to commodity prices, versus what's happening with growth in the economy. People have to eat, animals have to be fed, and so there is some inelasticity on that demand. The scary part about cattle, is, as it always is, it doesn't matter, whether it's inflation, no inflation. When you start pinching the consumer, it's like, all right, at what point, one of the first things they cut out is the higher cuts, right? I'm not going to go buy a $32 fillet. I'm going to, buy a pork chop or,
Right.
something like that, a lower cut. So great question. I don't know that there's a great answer for it. We're just going to have to kind of see how the consumer can hold this together. Because if things do start coming back, I mean, that's kind of a little bit almost like a tax savings or a tax refund, right? You get gasoline back to $3. Well, that's some more money in my pocket, right? Versus $4.20 that I just filled up for earlier this week. And so there's that give and take too. So, there's a lot of moving parts to that. Supply is one thing, how heavy we're feeding them, how's the consumer hold up? That is always going to be the question in this thing. And I don't know if I'm smart enough to answer that, Casey. It depends on how deep the recession is, how much job loss there is. Is it a, massive high inflation type setback, or, the labor market's so tight, you could still have a pretty healthy recession and still not see a, massive spike in unemployment. So there's a lot of the story left to be told as far as how this inflation, the interest rate increases are going to affect the economy over the next 2 or 3 quarters in here as we get into 2023.
Yeah. I was asking for a friend. I knew the answer to that, Chip. I was just asking for a friend. So
if you figure it out, let me know, because that's going to be a key point to this cattle market over the next 12 to 18 months.
I just like to keep those things to myself. That way I don't really.
It can be very valuable information if you think you have it figured out.
Yeah, I've got it off. Don't worry about it. We'll talk about it afterwards. I got it.
Okay. Off camera.
Off camera. Yeah. Last question. Okay. So obviously you hit on this a little bit too. We're seeing some movement in pork, it's kind of here, there again. I mean, it gets beat. It's just 1 week it's great, 1 week it's next. First half of the week it's awesome. Second half of the week it's great. Looking at the pork numbers right now, that, like we talked about with the price of cattle going up, I mean, there's got to be some support coming in on the pork side.
Yeah, I think the pork market, the hogs are pretty fairly priced right now. And I think some of that is because of inflation, because of the tight labor force, because of, the huge spike in lumber that we saw a year ago. Mm-hmm. And in construction costs. We're not seeing the expansion of the hog industry like you would expect. And so as a result of that, as a result of higher beef prices, demand's still pretty good. And our exports have been really good. Now they've cooled off a little bit. China's still in the market, but not to the massive numbers that they were, 9 to 12 months ago. But I think the hog market's pretty fairly priced in here. We didn't see the expansion. The consumer demand still should be there. We talked about how that might maybe hinder, the top end cuts on the beef side, but it should actually help on the pork side. And so I think the hog market's pretty fairly priced in there too. We haven't seen the expansion for 2 years straight because of high costs and tight labor markets. And, you look out here in the summer months, and I mean, we're coming out of a period here into the third quarter where we usually have, pretty poor prices and big supply. We got through that with flying colors. And now as you look out into, the first half of 2023, especially into spring and summer, this thing could be explosively good, especially if you can get some cheaper meal prices, cheaper corn prices. So this thing could get really good into summer. Doesn't mean we won't have breaks in there. We've seen $12, $15 swings in the hog market in here. The funds like to, throw their weight around and push this thing around at times. So I'm not saying that it's going to be a straight up ride to new all-time highs in hogs, but I think that we've got some pretty bright future ahead of us going into the first half of 23 for the hog producer out there right now.
Right on. All right, Chip, good stuff as usual, man. Folks want to reach out to you and get more information about what it is you're doing over at Blue Eagle Fag Marketing. What's the best way to do that?
Well, Casey, best way to just give us a call, 309-550-7213. We'd love to chat with you. It's always treacherous out there, but the next 12 to 18 months, I think, are going to be really challenging in agriculture. So love to chat with you.
Yep. No, I think you're probably right. There's a lot of moving parts here that are going to come together or spread apart one or two. So
hopefully the Swiss watch doesn't just blow apart and the gears fly out. That's my hope.
Yeah, that is true. Chip, appreciate you being on the podcast, man.
You bet. Thanks for having me on.
I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast. Check out the video version of this on the Moving Iron Podcast YouTube channel, which is called the Moving Iron Podcast YouTube channel. So check that out. Anything Moving Iron related, go to MovingIronLLC.com. You can see the entire library of the Moving Iron Podcast, all the blog posts, as well as all the information for the Moving Iron Summit coming up here in Nashville, Tennessee, September 11th through the 13th. If you want that $50 rebate, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I'll make sure that you that Axon gets you that $50 discount. So with that, I am Casey Seymour with Chip Nellinger. Smooth some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.